Hey folks, welcome to Monday, the 25th of April 2021. And we are waking up to markets that have been severely shaken to the downside. Namely, the main catalysts for this are the increased stringent lockdowns in Shanghai and Beijing. Of course, you've now got demand destruction for oil as a read across from that. So demand currently down 1.2 million barrels a day from China, and we are down about 4.5% on WTI because of that. Also, equities down quite a bit. Nasdaq down zero point 0.7, SPOO's down zero point 0.9, Dow down zero point 0.8, zero point 0.9 right now, and really, we're kind of only seeing the Fed rate hike cycle really start to read across into these markets. Several catalysts for this. Bloomberg really saying that traders are coming late to selling down these markets right now. But I think the quicker we can move down, the quicker we can start to find value and move back up. But I mean, looking across the board this morning at some of these equities back up here falling over, certainly like on the Nasdaq, um, on the daily here, you can see we're really back in this range that we'd identified about 2 weeks ago here. The initial push in, bounce back up to try and find 14,370s again. Couldn't do it, and you can see this morning we are now trading down through this area, all flagged to us by a bear flag. This bear flag that we saw on Friday, or sorry, Thursday, came in Friday. Had a retest there just on the open on this area, 13,672s, and down we go. So, really not a huge amount of selling here. I mean, point nine down pre-market is quite a bit for these equities. And like for example, last Thursday, the buying that came in, well, there was no buying that really came in the US session, but there was that sort of attempt at buying up in the European session and the APAC session. So look, uh, you know, long story short, bottom of the zone to trade 12,939s. Well, actually, technically, the bottom of this area is going to be 12,898s, actually. And the low from, let's see, well, actually, I'm not even going to take that in because it was support there about a month ago. We're just going to now update that um, here. I can't actually get the level, but I'll update that for the guys in Discord. So yeah, look, I think we're going to trade to the bottom of the range, and actually, I think all said and done through the week, we're going to trade down through the bottom of this range. If not this week, certainly next week. So yeah, there will be buyers in the bottom of this range for sure. Sorry, just go up here. So, I mean, slightly positive data coming out of German business IFO climate this morning, 91.8, beat on expectation 89.1. Um, but it's thin gruel for these markets. DAX is currently down on the day as well, about 1.1%. So look, I don't think there is any kind of refuge for the bulls at the moment. These markets just have to get like a year of rate hikes priced in now. Here's the SPOOs coming down on the zone as well. Back to test here what will be the high of the 10th of May 2021. We found support there on the 19th of July 21 and went into all-time highs from there. But as you can see, of recent, have breached down through there to find this trend support from the low of the 24th of Feb this year and the 15th of May. March here. And so, I think, look, a breach on this level, I mean, it's going to be massive. Now, I've been tracking this gap here for about a year on the SPOOs. When was it opened up? It was opened up on the 1st of April 2021. So pretty much a year since we've been down at this price, and the gap remains open. Now I am going to be branded a little bit of a loser for tracking that. And why is it important? Well, it's quite a large gap, and it hasn't been closed. And these markets are heavy, and I think they do need to price in lower prices. Now, this area on Spoos here is either going to be the best buying opportunity for the next 12 months, or it's going to be the best selling opportunity for the next 12 months, in my view. I think it's a bit of a Marmite level. You love it or you don't. And the linear, I've just kind of drawn the linear regression of the market here over the last, well, really back to, I think it's 2018 here, Volmageddon. Actually, sorry, Volmageddon was way back over here. Um, yeah, it was a pretty special time. But yeah, so we kind of came into this upper range though, really around late 2018 to start trending on up like this. So, if we do breach on this channel, I think there will be, we'll close the gap here. Um, this is going to be a significant drawdown from the all-time highs. Using the chart calculator to kind of draw that 20% pullback, well, that's going to be in and around this, where this gap is. All right, that would be a 20% pullback from the highs. All right, so it all kind of starts to fit together quite nicely now. Okay, um, what's the trade, Tim? The trade is sitting on your hands, letting this thing break, and waiting for good resistance to come in on the 4204s. But at the moment, we're going to come into this area as support, and we could easily then kind of work back up in the range. So for me, initial trades on 4204s, I'm going to be looking for the longs. Going to be looking for the longs, and then look for how the market wants to trade against, like, Friday's closing price here, for example, on the bounce, et cetera, et cetera. But, history is showing you here, recent history is showing you that there are buyers, big old buyers at this level. Have they been able to drive a new all time high on the year? No, they haven't at this point. Here, no, they haven't. All right. But, could we then be into a scenario where we're going to, test, back up here? I think that's probable at this point, rather than the big short, down. But listen, what's happening in Asia right now with these lockdowns is just is nothing to be you know kind of discarded. You've got oil demand destruction. um, I think the oil is pricing this in very quickly right now. Um, there's quite a difficult picture as we transition into looking at oil right now. This a very difficult picture. You have roughly 1.5 million barrels a day put on by the IEA, the SPR releases coordinated. Counteracting that extra supply, you have Russian production down 3 million barrels a day. You have 500,000 barrels a day offline in Libya. And and you've got now 1.2 million barrels off demand in Asia, right? So the SPR IEA releases and the Asian demand kind of cancel each other out. And then net after that, you've got 3 million barrels off of Russian production, right? So actually, we have quite a bullish picture. But the market is down 4.6% right now. And look, I think we need to come down to 94s. It might even have to come down to 91s to find the buyers again. And then I think we can definitely talk about new historical all-time highs on oil. And that's kind of the picture that I'm looking at right now. So not looking for buying into this Chinese demand destruction story on oil today. But I do think the buyers will be coming in a lot lower. I think 94.77's target on the downside, and that's the 2009 low. Okay. What else? Nat gas. Yeah, I mean, look, nat gas is gap down. Generally, this story out of Asia is really hitting all the commodities with a sort of a $1 fight out going on here. But I think nat gas should close this gap. But for now, we are quite elevated, I have to say, on nat gas. So I'm not looking to buy in too much at these elevated levels. You can see here, on the daily chart, we're testing the 20 EMA right now as support. just of kind of the last couple of hours. Can we then just rally back to 6.870s? I I I'm not. I don't think so. I don't think so. I think we have a cap here from the high of the 6th of October 21 at 6.595s. I think we should pull back down, at least test into the 50 EMA, and then we can look at, maybe even all-time highs throughout the rest of this year on that gas. Another thing to note is, yes, Macron got in, Le Pen got, I won't say hammered, but 42% of the voting electorate in France are leaning to the hard right. So I think Macron's got quite the job to do in kind of finding a middle ground there as he kind of goes forward with the presidency. But yeah, it's a good story for Europe. Are the bonds buying it? No. Are the equities buying it? No. There's other things driving equities. The bigger story of the rate hike cycle in the US. Is the euro buying it? Well, not really is the answer to that. So the election results in yesterday and in the overnight, Asia selling the hell out of it, and buying the dollar. So really that flight to quality in the dollar, risk off, has just absolutely walloped these markets, and I think the dollar actually may continue to appreciate. We're going to be down trading 06 560s quite quickly, simply because we should be trading, you know really positive on the day over that Macron victory, and we're just not. So don't fight the reality of what's happening here. So yeah, look, more downside expected on equities today and through the rest of this week, and yeah, the dollar to appreciate as well. Oil also new lows on session here. All right, I'll leave you with it there. Have a good session. Please do click the link and like, to subscribe. Do all of that. Do all the linking, all the clicking, all the subscribing, and have a great session. I'll see you tomorrow morning. Cheers. Bye bye.